I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member if and reciprocal of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, a ton of changes in here from last time I did a meeting. Last time I did a meeting, I was short silver AGQ and gold. Now I'm long silver AGQ and gold. I'm short SanDisk. I'm short the TQQQ as of today. Sort of tiny long positions in coin and CEG, just because of how beat up they are. I can talk about everything in a moment if you guys want. I'm also rapidly trading Palantir back and forth here on this earnings report. Palantir beating across the board. It's just, is it good enough? You know, that's the real question. Is it good enough? And I think that the stock is still too expensive even at these prices, even for that revenue growth. I mean, it's a pretty solid beat across the board on their top line numbers and on the revenue guidance. But you know, again, is it good enough? It's not even, like, it's obviously up, but it's only up into the 80 MA on the daily chart after getting slaughtered for 4 trading sessions in a row. So we'll see how this thing settles out. I was almost entirely out of my short. In fact, if I got up early enough today, I would have been entirely out of my short at 144. It's been my target. But it was there at 4 a.m. I slept in till 5:30 Eastern, 3:30 local time, and I missed that. So I'm actually perversely somewhat glad that it's up a little bit, just because it gives me some more ammo to actually trade this thing. I was getting concerned that I was going to be all out of it. So some good volatility here after hours I've been able to trade, but also still, you're not even giving the full move from on a good report. All it is a snapback to the 80 MA on the daily chart so far, and not even giving the full move based on the expectations. So that's that. As far as the market goes, incredible comeback. What's this nasty daily candle fake tail I have here in the SPY is ruining my chart. SPYs finished up 0.5% after being down a lot last night. The Qs finished up 0.75% after being down a lot last night. The IWM finished up 0.8% after also being down last night. So let's turn things over to the charts here. Let's go to the daily chart. So 5-minute chart. We had already gone up significantly off our pre-market lows by the time we even opened, and when we opened, we just immediately went from red to green, and we were pretty much strong all day. Tiny roll down in the last hour and a half of the day. Over on the daily chart, let's go to the SPX instead of the SPYs, because I got a weird tail there in my SPY candle. But the bears had a real opportunity today, and I thought that they were going to seize it. I really did. We've been discussing kind of becoming more bearish from a market dynamics perspective to begin with as we get into the month of February, particularly really mid-February. I guess February 13th is like the historical top of the market in February, so that's still 2 weeks away. But, you know, we're getting a little bit closer. The market technicals had the potential to begin to deteriorate, and there was a bunch of news over the weekend that maybe someday at some point can actually have an effect on this market. So far, it has not. So Thursday, we had a big downside tail with a really big intraday V bottom. Friday, I don't know about you guys, but I barely even looked at the SPYs on Friday. I was so focused on the metal trade, but the SPYs and the Qs gave an inside day. So it's kind of an interesting setup coming into today's trading session. Obviously, overall here, the picture of this market is bullish. But that big downside tail with the inside day, with the big gap down this morning, if we could have had the inside and down trigger for the S&P, that could have been the catalyst to get us below the low from Thursday. If we got below the low from Thursday, then all of a sudden this market's going to start looking not so good. I wouldn't say bearish even, just below Thursday's low, but moving into more of that neutral bearish territory. In order for this market to really get bearish technically, I think it needs to get below the January low. That's the really big spot that I'm watching. It's like 6,800 in the SPX. Interestingly enough, the low of the year so far, the low of January, also coincides approximately with where our CTA sell trigger is. And a little bit beneath that, per the Bank of America note that we read this morning in Pat's note, gamma would flip negative. So I feel like we're beginning to get close to building up towards that kind of when crash scenario. It sounds like option skew is increasing a little bit. People are increasing their hedges a little bit. The CTA systematic, funds are very full right now to the long side. So if you could begin to unwind that, especially if any sort of a catalyst would come in, you could break through those levels. We're starting to get back to that point where we were like back in October, where there was a term that I was using a lot in, like, I think it was in the beginning of October, where I kept saying, like, the risk is to the downside, right? That doesn't mean that we have to go down. It means that there is asymmetric risk to the downside. If we go down, then we can go down a lot, because you can trigger all of these things kind of like a domino effect, one after the next, and then it goes. So I've been becoming increasingly less bullish is probably the right way to say it, because I've been pretty bullish for December and January. I've been becoming increasingly less bullish as we get into the beginning of this February period that we're in now. But I still would like to see the market technicals confirm it. And the bears had a real chance today, because the bears had the opportunity to begin to trigger that. And maybe you could even argue that there's some catalysts that occurred over the weekend. But yet, we had a really, really strong day. Big red to green day, fully saved this market, and this S&P chart is back to looking full on bullish after maybe a little bit of concerns just with the price action on Thursday and Friday. The Qs are basically the same deal. The Qs didn't fully get above the inside day high, so I'd like to see these Qs kind of get back above like Friday's high through 6:30 to kind of confirm that they're back fully bullish. But now, right now, with where they're trading, they're like neutral bullish, and again, also had the opportunity to actually lead the market lower, because they were so relatively weak in the pre-market this morning. They were gapping down. They were gapping down for the inside and down. They were the one that looked like it was going to be potentially the first domino to trigger everything that we're discussing, but also obviously was saved. So here at the end of the day, we've got the S&P back to looking full on bullish. The Qs, I would say, neutral bullish. And the IWM is kind of back above that like 261 area that I was looking at last week. I was a little bit concerned with the close on Friday, but pretty good recovery today. Yeah, ideally want to see this IWM get back above 265 to be fully in the clear. But the Russell right now is definitely still pretty decent. So you can't really look at anything, I think, at the index level technically with this market and say, wow, it's starting to really confirm like the more bearish market dynamics or the more bearish thesis. It's just not there yet. But I'm gonna stick with kind of my game plan that I have, which is honestly, I'm taking a little bit more of a less is more approach. I'm hitting some singles and doubles, putting on some day trades. Day traded AMD today, Intel today, Micron today, SOXL today, Robinhood today, and every single one of those names I just mentioned, I either made money in or I was break even. Nothing huge, nothing that's going to make my year. But in an environment right now where I, bigger picture, have a little bit more uncertainty, I don't really want to be entering new longs in front of kind of this bearish seasonality that's gonna begin here. But I don't want to be pounding the short side without the technicals confirming it. I'm staying light. Over the weekend, partially because so many things got to my targets, and I got stopped out of one really big position also for the opposite reason. Over the weekend, I went home like lighter than I have been in like a very, very long time. But like Chevron, which was in for a long time, that got to my target. I got stopped out of Quad U. It's the silver and gold trades that, I had been pretty heavy on the short side. Ended up panning out, and I had fully liquidated those as well. So it was a pretty relaxing weekend, actually. No stress at all on the futures opening up. last night at all, which was nice. So yeah, we'll see where this market turns out. But overall things are really bullish. Yet I am hesitant to really be pressing new longs right now at this point. So that's at the index level. As far as individual stocks go, again, for me, I was just kind of very wrong about this market. I thought that weakness was going to give some follow through. Being wrong didn't really cost me anything except for some money in the TQQs. I started shorting the TQQs probably a little bit too early, and I am still in it, gonna manage that position. But outside of that, it really didn't cost me anything. The fact that the market was stronger than I expected, because we were able to kind of pick our spots. I think we did a great job calling out, particularly with the Qs, this like secondary lower high here as like a shorting opportunity. Well, really first this one, because we had 4 big green bars in a row for this time of the day. A lot of extension on the 5 minutes. There's a little bit of a 5-minute RDR. Then we tried to pivot off the ADMA, but look what time it is. It's post 10:30. 15-minute charts become really important post 10:30. And then we had like a little bit of like a lower high, equal high, spies and Qs that then kind of brought us in for that full 15-minute correction. So that was kind of a pretty good trade. And then into like a little bit of this afternoon roll down, I know I was able to call out like an AMD short here at a certain point. Then I know it broke that high and then rolled down a little bit, but I was able to stick with it. Micron, we're able to kind of call this little roll down. And these are all just small trades. Just small trades to make a couple bucks. Well, passing the time, honestly. SanDisk, incredible on this SanDisk. I shorted SanDisk on Friday. I did really well with it. And then I re-shorted it today, starting at like 6:30, a little bit over 6:30. And I mean, dare I say that the bullishness of SanDisk is incredible? Dare I call it crazy? Dare I call it choose whatever adjective you want? I mean, it really looked like we finally had at least a shorter term top in SanDisk with the way that it traded on Friday. And again, I did really well with it on Friday, so I'm down some P&L on it today, which I'm swinging, but I was significantly less aggressive with significantly less size. So the fact that SanDisk is back up to kind of the area that I was shorting in on Friday, I gave back a percentage of my gains from Friday, but not even half of them. So I'm gonna keep a little bit of it and kind of let the trade play out. But wow, such a good short call out that we had on Friday between SanDisk and Micron. I remember we called out and shorted both of them. I shorted both of them while managing the silver trade at the same time. Did really well with it. Just for SanDisk to basically be right back up at Friday's high is nothing short of like the most incredible stock I've ever seen in my career, honestly. And then at a certain point, same concept, shorted Micron for a day trade, but I'm not keeping any of that. I think that's all that I've really got. Oh, and I guess beyond that, continue to look at silver and gold. What I said in the morning meeting, the spot that I really wanted to start to buy some silver was like below 70. So I had a little bit of a feeler early on in the morning meeting, but I was primarily waiting to get below that 70 to really, buy stock more aggressively, which I was able to do into this move. And then we had a little bit of a break higher. And then we had a microcosm of the AGQ caused rebalance sell-off that we had on Friday, also at 1:30 today, that then once that was done, also got bought up. That turned into an okay trade. Silver actually is my best name on the day here at the end of the day. And then we were also really looking at this Tesla, which stayed really weak all day, but was able to bounce back. Tesla 420. And I guess, are they bouncing this Tesla back up now? They should be. I was really surprised on that headline that came out after hours that they initially down-ticked the stock, because I'm of the personal opinion that the only thing that could save Tesla is some sort of a merging between Tesla, SpaceX, and XAI. And, we've all kind of been reading the writing on the wall. I think it's the only way that Elon has any chance of getting that pay package. And then we saw the headline along with the Tesla earnings report. They're going to be buying $2 billion in preferred shares in XAI. And then today we're seeing these headlines that SpaceX and XAI are planning on doing some sort of a combination. So We'll see, but 420 is a huge support zone in Tesla. It was a great opening momentum short, but then just with the strength of the market, wasn't able to really give any follow through. So that is all that I've got. I am happy to answer any questions that you guys might have. AMD moving. Yeah, AMD's up big here after hours. NVIDIA is now down. There's headlines on OpenAI on NVIDIA that crashed it, and then it brought it back, and then it came back up, and now it's lower again. So I don't know if AMD is going to be the beneficiary of this OpenAI NVIDIA headline, which I'm happy to read out loud if people missed it. OpenAI unsatisfied with speed at which NVIDIA's hardware can spit out answers to chat GPT users for complex problems. That's the headline that seems to be moving NVIDIA down, and maybe it's moving AMD up, but I wouldn't necessarily think that AMD could do a better job than NVIDIA at that. But maybe some of you guys know the technology better than I do. From Cody, I think I saw in Pat's note that the IWM historically performs well in the beginning of February. Okay, it's good to know. I missed that. If so, I missed that. So we'll certainly keep an eye on the IWM. Good recovery from the Russell today. Back above 261, I think saves it. Back above 265, and this thing will be looking really good. Not seeing anything else in the virtual trading floor. Over to the YouTube from Scott. I know you don't do Friday afternoon meetings, but holy sheesh, silver. What a down move. I did not expect that kind of a sell-off. Nice hangman doji on Thursday. Yeah, I mean, silver's down move was one of the biggest in the history of silver, biggest in 50 years, biggest in whatever. Just a massive, massive move. I mean, it's one for the textbooks for sure, and it's brought on just by a whole confluence of factors. First and foremost, I would just note the parabolic move in silver, which we had been discussing a lot. It looked like we had that break back here on the 26th, and then that new high kind of came in. But, regardless, silver was moving on a parabolic path that was unsustainable. It was really just a matter of the when, where, and how. And then again, it just seemed like a whole confluence of factors kind of came in together. It looked like the London Metal Exchange was not going to be able to honor delivery on futures contracts. So then they go kind of into an emergency mode where everything becomes cash settled, but that inherently reduces the value of it because now it's just worth the paper that it's printed on as opposed to being backed by actual silver. So I think that was like the first big catalyst. And then it was just kind of one thing after the next. People that were over leveraged, feeding onto each other. And then honestly, it's also even a lesson in these leverage ETFs and what they can potentially do and the damage that they can cause. Because this whole, we talked about it a lot on Friday, but this whole last part of this sell-off in silver was because of AGQ. So like silver here, this move in SLV from 79 pretty much all the way down to 69, $10 move in silver. What's that, like 12, 13% or something like that, 13, 14% in 45 minutes. That entire capitulatory move was caused because of the redemption scheme that these levered ETFs actually have to pay, the rebalance that actually comes from it, which led to a great long. I was entirely out of SLV by I want to say like 83 or something like that. And the next thing I knew into this down move, I found myself going long because of the volume increase. That we noticed some weird discrepancies that we didn't understand at the time on AGQ, trading down below SLV. You can see SLV making this new low here at 140. AGQ didn't actually do that. There was a similar discrepancy, I think, between the silver futures chart, if you could look at it, and the SLV chart. So just a really, really historic situation there. And it led to a phenomenal bounce back trade. I did really well actually on the bounce back trade. And then, this morning it was like, all right, we have a lot of downside extension here. You saw a lot of sell-side analysts come out and defend silver, being like more of a structural pullback here, but the bigger picture thesis is kind of intact. You just washed out all of the momentum speculation on Friday, and then at a certain point it probably becomes a buying opportunity. And I agree with that thesis in conjunction with the downside extension here on silver. The difference today, it was interesting. I almost felt like I was fighting the opposite of some things that I was fighting last week when I was short it. When I was shorted at certain points in this parabolic move, I felt that it was kind of ready to break, but at one point gold seemed to save silver, and at other points the destruction in the dollar seemed to save it. And then today was almost the opposite. Like being long silver, especially looking to add into that $70 area, I couldn't really get this thing to fully break up in the way that I wanted to. Obviously, it was a good move off of lows, and I think that some of that actually was the opposite. It was attributable to the strength in the dollar. And then I know that other people are talking about the Warsh nomination as being impactful in this as well, and I'm sure that also has some degree of an effect. So, it's definitely a crazy one. I'm going to go back over to the VTF and then I'll go back over to the YouTube from Mustafa. Last time the short-term CTA level triggered, it acted as strong support, but they were also strong support there. Do you think the CTA level had something to do with it, or it was just the support? Should we expect that this RB defended? I don't fully understand. So the CTA level did not get triggered yet at any point. Oh, this SPY chart's annoying me. No, so no. So I know what you're saying. I don't remember if it was the October. I think it was the November low. On the November low, I think that we triggered the CTA sell trigger point by like a tiny bit. But we immediately recaptured it, and we were very extended into it. So it's like, yeah, we went below it, but it's not like you trigger this CTA level and all of a sudden you just get $1 trillion of selling that hits the market all at once. You kind of have to sustain the level. So, especially, I don't fully know how every single CTA executes, but we know a lot of that is kind of done into the close, and they spread that out over periods of time. So in November, we triggered enough, and part of it was also, I'm like remembering things slowly here. Part of it was also that vol control, I think, was even potentially like buying at that time because they got washed out in October. So it wasn't the situation where you had everything trigger at once. But so I can tell you that it's definitely a mistake to think that a CTA sell level trigger will in any way act as support. It's not that way. It's if anything, it's the first domino effect. The vast majority of the time that I've ever seen those levels trigger, it is the beginning of a larger sell-off. And if anything, November was one of the few exceptions to it. It had unwound. The positioning wasn't full enough for one, and two was it just didn't stay beneath it. It was like a very, very quick trigger that was immediately back above it. So I just don't think that it was enough to push it out. But I know that there was then a little bit of CTA selling on the way up, which was able to kind of unwind it, which was part of the thesis of we just don't have enough long exposure kind of built up to have the domino effect impact like in December and the beginning of January if it were to re-trigger. So one of the things that I've been watching in conjunction with us approaching this mid-February, and you can kind of see it in Bill K's chart, is kind of watching it rebuild. And now you can see in the chart that he posted this morning that the CTAs are becoming very, very long again. Vol control is also pretty long, but probably could be longer. So I would actually like to see them on the bid a little bit further and get a little bit more full also. But I think that we're starting to get close to that situation where we have asymmetric risk to the downside. But no, I would not view that CTA level as a support level. It's just it tends to be kind of far away in an uptrending market, so it's hard to trigger it without a real event occurring. From Ethan, I have a question regarding the silver trade. Could you explain why the short side was the side you were pressing the entire month of January? I know you have a game plan and traded it so that you were still probably even making money while silver was going up, but wouldn't it have been easier to manage and make money being on the long side, riding the strong momentum up? I know we don't want to buying things that become extended in chase price. Just want to understand why the short was the play on silver that finally paid instead of trying to ride the long up to the top. Sure. So, the first thing that I would tell you is that there's a lot of ways to make money in the market, and I really think that this silver trade was a trade that people could have made money on both sides. I think that the extent to which silver went parabolic exceeded the expectations of pretty much any really good trader I know. Almost every really good trader that I know, like the best of the best, was short silver and was getting hurt by the time this thing actually peaked out at 110. Just because the degree of the move and the degree of the extension to the upside there was just exceeding anything that's ever happened in history prior to that, and just really exceeding expectations. And it circles back to that age-old saying of a stock or a market can remain irrational for longer than you can remain solvent. So I was having conversations because I was in it myself with a lot of like really good experienced traders who were short silver, shorted too early, and really on that like last evening and last morning, and myself included, were starting to get hurt when this thing got above the high of this big volume tail here from January 26th that everybody thought was it. But there's different ways to make money in the market. I am not a phenomenal momentum trader. I can't look at a parabolic stock. And without a doubt, there are people that were out there who were doing this and doing this successful. I think that people made money and lost money probably to a large degree on both sides of this trade. There were some longs I think probably made really good money as long as they didn't get stuck in the gap down, and there were some which some definitely did, by the way. And there were some shorts that made really good money as long as they didn't get pushed out on that kind of last peak, which some did, by the way. So at the end of the day, I actually think in some ways it was a really difficult trade because it was a really difficult trade for anybody that was short to really be able to hold past this January 26th high. But it was a really difficult trade for anybody that was long. If you hadn't sold your long by the time that high came in, you probably got caught in the gap as well. So the pure momentum traders want to be able to try to keep those stop losses tight, but there was no way, unless maybe you're trading the futures and you were up all night, there was no way that if you were long this thing that you weren't getting absolutely destroyed in this gap down if you still had anything to the long side on the 29th. So, it really comes down to, I think that so much of trading, and this is why I try to spend time talking about this, so much of trading comes down to game plan and trade management and the math and the sizing, almost even more than if you were long or short, using this trade as an example. Because, like I just said, there are people who both made and lost a lot of money on both sides of the trade. So for me personally, why am I focused on the short side of this trade? I am a believer in trend following until trends get into extremes. That would be the first thing that I would say as kind of like a general rule. I'm a big believer that the trend is your friend. If things are trending up, you want to be long them. If things are trending down, that you want to be short them. When that changes is in periods of extreme. If you've ever heard a very overused saying that people say all the time, and I don't think that they use it in the proper context, it's like a Warren Buffett saying of be greedy when other people are fearful and fearful when other people are greedy. People use that, I think, too often as like a contrarian statement where they always want to be a contrarian. Anything that's trending higher, they want to be short. Anything that's trending down, they want to be long. That's a great way to lose money. Really, that quote should be taken in the context of extremes. When people are extremely greedy or extremely fearful, those are the rare times when you really want to be coming in on the other side of the crowd. Otherwise, you want to be moving with the crowd. So for me, I first saw silver beginning to go parabolic and first shorted silver back here on the 26th. And in hindsight, when we see where it actually went to, it looks like a blip on the radar. But if you remember what the chart actually looked like at that time, if you just went up until that point, this was a chart. Look at this chart. This chart is extremely parabolic. So this is no longer an uptrend. This is a chart that's going parabolic. That's an extreme. And at this time, and this was the first time I shorted it, you had volume increasing, volume maximizing, and it was becoming, at least on a shorter term basis, the way that I measure extension, one of the most extended that silver has ever become. Now, could you have, again, in hindsight, been buying silver at 68 and made money in this thing? Absolutely. It went to 105. I will never personally take that trade ever. I will never be chasing this high under the guise that maybe a stock or a market that's irrational can become even more irrational. That is not the type of bet. That's not the type of game plan that I'm interested in trading. But at the same time, when a stock is extended, or in this case a commodity is extended compared to what? Its equilibrium zone, really all I'm looking for is a move back down to the equilibrium zone. So by the next day, this thing, and it was tricky, this was a weekend, I remember it because I had a little bit too much size that weekend. I was a little bit nervous come Sunday morning, and the futures initially gapped up on Sunday morning. But by the time our regular trading session opened, it gapped down, and during the day it traded down to the ADMA on the daily chart. Well, once it touched the ADMA on the daily chart, it's no longer extended. And I know for myself, I was out of like 80+% of my position by the time I got down to that low, and I made pretty good money with the trade, right? And I could have gotten out of all of it, but I was a little bit greedy with that last 20%, like I like to be, thinking maybe I could get a little bit of a deeper pullback towards the lower band of equilibrium, and, that's not what happened. And then I kind of stayed light, and the thing kind of gave a little bit of a wave too, and it was similar. I got a little bit heavier here, but I remember not being as heavy on January 6th as I was on December 26th because it wasn't as extended. And then again, caught up a little bit of a pullback, one day down, next day gap down into the equilibrium area, or same thing. I was out of 80+% of the even smaller position that I had on January 6th. So I'm just kind of gaming the extension at this point, really more than anything, and then rinse and repeat. Extended here again, and by this point it was a day 4 to the upside, and this extension was similar to this extension, and it's looking parabolic again, especially at that point. I could zoom in like I did, but I won't bother. And you got to pull back into the ADMA on the daily chart, and this was probably the one mistake that I made in this was, I got out of 80+% of my position on the first pullback to equilibrium when it went parabolic. I got out of 80+% of my position on the second pullback when it went parabolic. I did not get out of as much of a percentage the third time I went parabolic on the pullback because I kind of thought that was it, and we had even higher volume there. I was a little bit greedier on that side of the game plan, so that when this high actually came in here on the 26th, because I didn't get as light into the ADMA as I had on these previous two circumstances, I was now hurting a little bit when this thing was up at 105. I'd given back everything that I had made plus some, and it was definitely negative on this thing by the time it was at highs. But at the same time, by the time this thing was at highs here at 105, it was more extended than any of these other two times. And I remember doing the morning meeting that day or discussing there during the day, I don't exactly remember, that like when we were, I think even just at $100, let alone at the high of 105 plus, this was double as extended as SLV had ever been on a percentage basis off the ADMA in the history of the chart. I went back and I reviewed every example. It was double, more than double. So, it's the same thing. I guess in theory, you could have bought $100 here. You could have bought $100 at $98 here and made 105, 107 and made money on it. I just don't see how anybody could have purchased $99 in this unless you just did it as like a really, really quick in and out day trade and not got caught in the gap down at that point. Because if you're willing to chase price by that much, you're willing to buy above the ADMA that much into a stock that's going parabolic, There's no way that you fully liquidated your position at 108 or 110. You got caught in this gap down, and you probably got burned really, really hard for continuing to chase price and chase a parabolic move. And I remember chatting with, one of the guys who's one of the best traders in the entire company. He's not really in the VTF, but I'm friends with him. He's been with T3 for maybe even a little bit longer than I have. He's a phenomenal trader. And him saying my thought process, because we were chatting about it. We were both short, and we were both experiencing some pain at like 105. And him basically saying anybody who's dumb enough to buy this thing here is gonna get hurt. They're going to get hurt. There's no doubt about it that if you're buying 105 right now in SLV, you're gonna get hurt. And it took a few days, but he was right. And we don't chase parabolic moves. So again, to circle back on your question, the trend is your friend. And not really with silver so much, but with gold, you can remember, we were riding this trend to the upside at various points. We called out like this. We were buying this break of this wedge to ride this trend for continuation. I remember buying like 315 and riding it all the way up to, I don't remember, 360, 380, something like that on the way up. And then it went parabolic here, and we were short here, by the way, caught this little bit of a down move. And then just this move that just happened was historic. So, I, for the way that I trade, really believe that being on the short side was the right side of this trade. If you're a pure momentum trader and you can game plan well and execute well, it's definitely possible that you are buying $85 in this thing on the way up and that you made money. But you got to keep in mind that, like, even if you bought 85 and made money, I don't think that's a good trade. Because you got to keep in mind just how historically extended this went. I think that, if we want to think in terms of probability, the fact that this thing did this parabolic move on this increase in volume here and went to 85 and then went to 110, that's a 1 in 1,000. And with a significantly higher probability that this thing had a bigger pullback here, consolidates here, does not continue here, or only continues after a significantly broader consolidation. And, I'm not the person that comes in and takes bets on 1 in 1,000 situations that may occur, especially if the risk reward doesn't justify, exceeding a 1 in 1,000 risk reward, which then there's just no way, in my opinion, when you're chasing something that's that extended. So I hope that helps you kind of understand the difference between, like, the trend is your friend and you want to be on the side of everybody else, but also seeing when things are at extremes. And also just, with this silver and gold in particular, this was historical. This was a historic move. And in my opinion, there is a reason why I sometimes consider myself to be a decent trader. I've been doing this for a long time. And honestly, all of the best traders that I really know, I'm talking like consistent 7-figure traders, were all short this thing at the same time with me, and all were starting to feel some pain at the same time that I was starting to feel some pain. And I think that's all for a reason there. So I hope that helps. What else you guys got for me here? From Brian, how do you feel about XLF in the bank trade? So XLF I didn't like as much as KRE. The nice little roundup here in XLF. I know we looked at it really briefly this morning. I was like, yeah, maybe it could bounce. But KRE was the one that I thought looked pretty solid this morning above 69. And I think KRE looks great, by the way. And that might also have something to do with the Warsh nomination really helping to positively impact these banks, particularly KRE. So I like them. I like KRE more than XLF, but I like them both. It just, again, if the market really sells, there's a good chance that they sell everything. So I would be a little bit cautious. Back over to the YouTube. I got a Bloomberg push that non-farm payrolls unemployment was canceled on Friday. I saw the same headline. I have no idea why. I have no idea why it's canceled, but I saw the same headline. From NG Factor, silver had a big move on Friday. Can you review how you traded it on Friday and what were your short entries and covers? Yeah, so kind of did that already. You know, it was a little bit bigger picture, but really the best short execution that we communicated was from Thursday, not from Friday. So the best short execution in this thing was from Thursday when we communicated shorting. You can see. We're just moving. You can see this tail low here at the 9:45 a.m. candle, 5-minute candle from Thursday. And then there was a quick little upside tail here at 9:55. When this upside tail came in or was in the process of coming in, I communicated that I was putting in a sell stop beneath the 9:45 a.m. candle low, which was 107.65, to short something that was clearly parabolic, but to short it on the way down, And that's the best execution. That's the best execution out of all of this. I know that some people kept it maybe a little bit tighter than me and got pushed out at certain points in the afternoon when this thing went a little bit higher. We talked about that in Thursday's afternoon meeting, where I just think that when you're looking at the big picture that is that extremely extended, and you capture that down move, you keep some versus that high no matter what. And that's what we had been talking about constantly, was we can find these, like, even if they're lower probability of success, but phenomenal risk reward spots, get the risk covered. If you shorted SLV on Thursday at 107.65, when I communicated to everyone in the virtual trading floor, I'm putting a sell stop at 107.65 with the stop loss being 108.90, so you had like a little over $1 risk. If you took stock off for profit at 106 on the downside to cover your risk, I love that. I don't care that it went to 70 by the next day. It's a great cover to be booking some at 106 to get the risk covered. But once the risk is covered, and I think this is where some people hurt themselves, was because this bounce back in the afternoon on Thursday was pretty strong, was a large percentage of the opening down move, that some people got out entirely and didn't give anything back to that high. You needed to be short from Thursday and swinging some into Friday. That was the move. For me, Friday was primarily about just booking profit. I mean, I was trading it back and forth. I covered a ton pre-market. I shorted the bounce back. I covered some more. I shorted this bounce into this moving average. But that was all my usual kind of incremental buying and selling. And then again, per my game plan, I was fully out by somewhere in these low 80s. And then, like I already talked about, we're starting to flip long into this capitulatory down move, which also turned into a really good kind of long trade. So that's silver. From Scott, I shorted Oracle this morning. Yeah, Oracle was a great short this morning. I didn't take it, but we talked about it in the morning meeting and pre-market, and I really liked it. Oracle just all over the place with news this morning. They had a debt offering that went well, but then they announced a secondary offering of stock, like $20 billion worth of stock, and that crushed that thing down and created a real high on it. So it's a good opportunity to really be able to short some. Yeah, it looks like you got a really good price, so nicely done. Good stuff. From Giancarlo, Micron 30-minute short, 8 a.m. candle. Micron, I don't have a 30-minute, but I can look at a 15-minute and try to figure out what you're talking about. I'm going to include the pre-market. 8 a.m. candle. Okay. So this is impossible for me to read because the 8 a.m. prints were going off on that day, so my chart is not accurate. So I really don't even know what that candle looked like. But if price traded down into these moving averages, then yeah, it's a satisfaction of equilibrium is what that is. Whether that's a long or not depends on whether or not it's in an uptrend. And looking at how this traded on Friday, I would argue that it's not in an uptrend. I mean, I guess it is just off the pre-market low. But I personally would never buy, if this thing pulled back to somewhere around here at 8 a.m., I would personally never buy that. Yeah, I'm in a tiny, tiny, tiny Coinbase long. I'll tell you what kind of made me go to Coinbase compared to anything else in crypto, and I'm a crypto hater, but I think it'll bounce at some point, is this is a day 4 to the downside in Coinbase today, as opposed to IBIT, which in some ways is more extended, but was like kind of only like a day 3, or maybe even you could argue a day 1 after it traded on Friday, after the way that it traded on Friday. Coin was a day 4, but Coin I think is trying to diversify their business and become a little bit more like a Kalshi with the betting. So I think that that might decouple it a little bit from the way that crypto trades. So, again, it's a tiny, tiny extension long that I have on. Nothing to even note, to be honest. It's such a small amount of P&L. And I'm green on it at the end of the day as well here. But it's really small. But yeah, that's kind of what I'm looking at. You're looking for WDC short. Yeah, I mean, all these names are just really, really hard. SanDisk, WDC, they fully price corrected on Friday. You kind of wanted to be in these on Friday when WDC and SanDisk were moving on earnings and really gave full technical corrections. And I know, WDC was even weaker than SanDisk, but SanDisk, I've got enough of a P&L cushion that I'm okay with this thing being against me. Look at this, continuing to run here after hours. Hold on a second, I just need to adjust one of my positions. All right. What's going on? What would I do different in hindsight? Yeah, the only thing that I would have done differently in hindsight, but it's hindsight. So, well, I would have done nothing differently in hindsight because I followed my game plan. Like with a perfect crystal ball, I would have taken a little bit more off into this down move here, so that I wouldn't have been quite as heavy at these highs. But it is what it is. Cool. 11 a.m. my time on Micron. I mean Eastern time. I'm technically on Mountain time, but we run on Eastern time here because Eastern time is market time. So at 11 a.m. Eastern, yeah, this little pullback that occurred at 10:45 in Micron would technically be viable. It's not pre-market though. I could have sworn you said pre-market. I don't know. I'm not buying that because I'll tell you why. Sure, you can point to a 5 or 15-minute chart Micron that is trending higher, but I always start with the daily chart. I'm not buying this within the range of yesterday where it finally had like a bearish engulfing candle on higher volume. I'm not taking that. Typically, probability would dictate that after this candle on Friday, this thing is due for a deeper price correction. Now, Micron and SanDisk and WDC and STX have been anything but typical stocks, but I'm never going to be buying. Where's this thing trading at 11 a.m.? Like 434. I'm not buying this heavy of a retracement of this candle at this point after it failed on volume like that, and we're seeing some weakness in that area finally come in. No shot. Big picture down to small picture. Hope that helps. Cool, good stuff, Ethan. All right, guys, I'm going to wrap it up there. Have a great night, everybody. See you all tomorrow.